Fidelity Fund SPAXX is a very expensive money market mutual fund. The fund costs 0.42% per year in fees that you don't see. That's a lot of money to be paying for a money market mutual fund product. Additionally, the fund is tax inefficient. Only 55% of the fund's ordinary dividend in 2024 was generated by U.S. government securities. And what that means is that 45% of the dividend was generated from repos, which are taxable at the state level. If you live in a state that has an income tax, SPAXX is probably not your best option for cash. If you're trying to generate interest on cash and you have a lot of cash, there are alternatives to SPAXX that can save you a lot of money in fees and taxes. Number one, T-bills. If you buy T-bills from Treasury Direct, you cut out the middleman because there are no fees. You can save yourself 0.42% per year over SPAXX by just buying T-bills on your own at Treasury Direct. Another idea is the iShares ETF SGOV, SGOV. SGOV is an all T-bill ETF. It's very cheap. It only costs 8 basis points. Additionally, it's tax efficient. SGOV dividend is 100% state tax free. It's a lot more desirable than SPAXX. So if you have a lot of money sitting in a Fidelity retail account and you're using SPAXX as your core position, you may want to rethink what you're doing there. The fund has hidden fees and they're substantial. Let's take a look. Fidelity discloses their fees for SPAXX directly on their website. You can see that it's 0.42% per year, but you don't see it on your statement from Fidelity. The fee is buried inside the mutual fund, so they just debit it from inside the account. You don't actually see the fees, but you should be aware that you're paying them. There's $400 billion in this fund. I suspect a lot of people that own SPAXX are not aware that they're paying almost a half a point a year to Fidelity to manage this money market mutual fund. Here's a cost comparison for $1 million investment in SPAXX versus SGOV. SPAXX costs 0.42% or $4,200 per year for $1 million investment versus $800 for SGOV. SGOV is 80% cheaper. And that savings on your annual expense ratio really adds up over time when you're looking at a simple investment like money market, T-bills, repos, etc. In 2024, only 55% of the Fidelity Government Money Market Fund ordinary dividend was generated from U.S. government securities. And that means that the remainder of the dividend, 45%, was taxable at the state level. Let's see the impact of the extra taxes compared to SGOV, which is 100% state tax exempt. This illustration shows us the potential differences for state taxes between SPAXX and SGOV. We're making $1 million investment. We're using the dividend yield as of May 30, 2025. SPAXX has a 4.48% dividend yield, but notice that SGOV is much higher at 4.71. That's largely because of the fee discrepancy. If the yield remained constant for the next year, you would receive $44,800 from SPAXX, $47,100 from SGOV. If they continue to manage SPAXX like they did last year, 45% of your dividend would be taxable at the state level. That means $20,160 would be taxable at the state level, assuming you live in a state with an income tax. If we use 6% as your state income tax, which would fit many states, you would owe $1,210 in state income taxes with SPAXX. So now let's think about this. Not only do you have a higher tax burden, but you also have a lower yield due to the higher fees. Clearly, SGOV is a better alternative to SPAXX for someone who maintains a heavy cash position in their portfolio. If you have questions about your investments, please give my office a call. We would be happy to give you a free second opinion on your portfolio. If you like this content, please share it with your friends. I hope this video was helpful. I hope it gets you thinking, helps you better analyze your investments, and overall improve your family's financial plan.